they're making like $1 million a year EBITDA. Business is a good business if you own all of it or own, half of it. You're making good income and you're probably in the top 1% from an income perspective. And that's where they plateau because they're like, oh, I got here. That sucked. And they could so easily go to 5 million.
Welcome to the Business Ownership Podcast, brought to you by Awareness Strategies, helping you navigate the waters between entrepreneurship and ownership. Hey there, peeps. This is Michelle Nedelec, and I'm super glad that you're here with us today because I'm here with my most amazing guest, Jeremy. Jeremy, thank you so much for being here with us today.
No, thanks for having me.
Awesome. So give everybody the highlight of who you are and what you do for business.
So yeah, I'm Jeremy Delk. I guess probably best describes like a serial entrepreneur from a small town called Bardstown, Kentucky. So spent my early career on Wall Street and then ventured out into private equity and venture capital, started my own fund about 20 years ago. And we invest in small, medium-sized businesses. We're industry agnostic for the most part. So doesn't have to be a specific industry. The last 10 or 12 years has been a lot of real estate development, a lot of healthcare. But yeah, we excited to kind of, get out, talk, share some stories that just finished a book last year called Without a Plan. It talks about, really, it's a memoir of unbound action and failing my way to success. And I really try to talk and through my coaching programs or just speaking on stage, talk about, changing that mindset of failure. Because I think so many people have this negative connotation of it. And that's where I think the real learning happened. So that's about me.
Awesome. Well, we will absolutely get into all of those details, but I have to ask, what took you from Kentucky to Wall Street?
Yeah, I mean, it was definitely a windy road. I mean, I think I grew up in that, small town, the big fish, small pond mentality. Yep. And I always had this drive to kind of want to do more, see more, and be more. And yeah, through a kind of twisty path, I ended up going to school in Providence, Rhode Island on a scholarship for marketing. And then I started day trading at a young age. I was like 17 and had some minor success in that. Took 30 grand of an inheritance and grew that about 2 years to about $2 million. And then subsequently blew it in the late 90s, early 2000s, if you remember the .com kind of bubble. I lost $2 million in about 4 days, which was pretty cool. And that kind of, put a spiral in place, but things don't happen to you. They happen for you. And through a random sequence of events, I end up becoming one of the youngest institutional equity traders in Fidelity history. I was 19. So.
Wow, that is awesome. So I'm picking at threads that I think were foreshadowing. So you got an inheritance and you decided, hey, I'm going to take up day trading.
Yeah, I mean, it wasn't as directed that, but it wasn't too far. Because so I knew I was going to come into a little bit of money. My dad passed away when I was younger, and I think it goes to where I wanted to be. And like Sinatra said, if you can make it here, you can make it anywhere. And like obviously speaking in New York, and being in this sheltered kind of small town environment, the only thing I equated New York to was like good mob movies, like the Mob and Mafia and like Godfather and all those things. My last name's Delk, so that wasn't going to really work. And then Wall Street was the other piece. So that's literally how simply it was. So I started reading Wall Street Journal, Investor Business Daily, and completely self-taught, complete idiot. I learned a lot, but self-taught. And this is way before the internet where you can actually educate yourself pretty efficiently. I was just kind of going through off a lot of, feel and.
Well, yeah, I was going to say like back then it was, you had books. And if you didn't have the books in the library, you really didn't have access to it. So somebody clearly.
Yeah. Well, we had, it was the early, not early era of the internet, but it was just kind of, on its up, and they had the equivalent of Reddit. I don't know if it's actually still around. I should check. It was called Raging Bull. And it was a Raging Bull. That'd be hilarious if it was still around. Improve your trading skills. There you go. So Raging Bull was it's much cleaner now, but it used to basically be just a big chat room where you've got these idiots that, with who knows, right, what they're saying, but they're just going through on message boards like, this is my opinion here, and these like little micro analysts. So that's where I was in these, chat rooms listening to people who they were on the internet, so they must be smart type of thing. And, but I learned a lot. It was good. And then you start to get a sense for the market. And yeah, it was fun. I mean, losing that much money sucked, and it was probably the worst thing that happened to me at the moment. But in my life, probably it was one of 2 or 3 events that really helped me be who I am today.
Oh, well, I am absolutely fascinated with the way that people's brains work and how they create the successes that create. And we are here to help those who are kind of listening in and going, okay, so how do I do it? One is self-help, one is Raging Bull, but the others. So talk to me about kind of what you're doing right now and how you're working with, equities and all that kind of fun stuff. What are your big projects right now?
Yeah. So right now we're, looking and doing a lot of real estate stuff, which is against popular opinion, right? We're in this recession and alleged recession, but I think this is where opportunities, there's a lot of fear in the market. So we're leaning into that. So that's something we're looking at. I don't have anything in the stock market, funny enough. Usually most of my investments are small, medium size. I was early in Airbnb and Uber and 23andMe, but I exit after they go public typically. So we really, because I can't make an impact there. I mean, I think they are good, sound companies, completely passive, but I like to be an active investor. Delk Enterprises is the name of the firm, and it's strategic capital. So yes, sometimes you need money, and most times you need money. Oftentimes it's not as much as you think. And also, money only solves part of the problem. Now you still have to go and deploy that capital to something. And that's either human, as a team, a software, an ad campaign. So over the years, I've built, my own team. So there's shared services. So we're able to, help entrepreneurs kind of get to where they want to go much quicker with capital, but also a way to be able to deploy that. So it's been a bit of a win-win. So now I find myself, I do a lot of podcasts, I do a lot of speaking on stage, and it's, part of it is altruistic because I like to kind of help people. I think entrepreneurs are problem solvers innately. So this is something that I like to do, and I like a challenge and kind of figuring out issues. But so hopefully they take some value and learn some lessons that I had to learn with them without them having to go through it. But also it creates a lot of deal flow for me, in full transparency. A lot of my clients come on as coaching, and I'm helping them, or consulting, whatever you want to call it. And that allows us to build a relationship. I'm able to add value far above what, this little small consulting fee is. Then I can prove my value, go through it, and then allows me to kind of offset some of the expense of my time to learn about these industries and these businesses. And then not all the times, but sometimes it does, turn around to me, either investing capital or time or resources or all the above into a business. So it allows me to get new deal flow and see new deals that I wouldn't otherwise see.
Well, I know there is a ton of opportunity, especially in the States, for people to be able to invest in at an affordable rate, I want to say, because I mean, it's absolutely insane in some places right now as to kind of what kind of properties you can get and build out. What area of real estate are you in, and how does your operation work?
Yeah, so I don't do huge industry, which I think is very successful. I'm just not in. I've been in it before. Is a lot of multifamily stuff. I think that is saturated, and kind of a lot of that is a bit overpriced. But it definitely is the future, because I think the new generation are not like our parents or even like us, where the American dream is let's buy a house and that kind of thing. That's not necessarily how this next generation is wired. They're more experiential based, and housing is just, a service that they need, just like getting DoorDash. So I do think that is the long-term play. And you see guys like BlackRock and big institutional money going there. I've, again, had those properties. I've made, better margins and returns for me on like trophy assets. So we've got, like high-end luxury, resort type of projects and properties that are, again, nice trophy assets, but very unique. So you get a bit of cachet and extra value there. And then a lot of commercial. So flex space is really cool. So this is for anyone not interested or not knowing what flex space is. It's usually industrial space with a small office. So think of every painting contractor, plumbing contractor, gutter contractor, they need some little office space to work out, but it doesn't need to be in the most, desired neighborhood. So you can often find land inexpensively, but they have good cash flow to be able to pay really good rents. So you're almost like land banking something that, as, property grows and you have this urban sprawl, it could become, more valuable property. And then it also gets a really nice cash flow because really all you're building is, pre-engineered metal buildings, some slabs, mainly warehouse space. So the turnout and fit out cost is much less than typical retail. And you've got a higher longevity because these contractors, business is good for them. Yearly, currently very good, but even through, from a recessionary standpoint, people still need a plumber, gutter guy, those types of things. So that's interesting to me. And we're right now exploring a lot of commercial properties, so office buildings, and looking about maybe repurposing those for other uses now that, not everyone goes to the office every day. So those are the probably 3 verticals.
I love it. So when you're looking for people to work with, I'm assuming that you're looking for investors to be able to come in and play, or is there other aspects to it?
So investors so we don't, most of those deals we do ourselves.
Okay.
We would partner on someone that would bring a deal to us, right? That doesn't have the capital or something like that. That's really what it is. But if we can find them ourselves or create them ourselves, we'll likely do them ourselves.
Awesome. So how do most people work with you?
So, really it starts with a call, right? You can get in touch with me on jeremydelk.com or through any of my social channels, and it sets up with a discovery call. I am the guy you want to call if your business is on fire, right? If you have a business and you're trying to do incremental growth and it's taking it from 7 to 10%, I'm probably not your guy. And that's good to know who I kind of serve. I'm just not, engaged or thrilled by that. I really like to kind of problem solve and kind of think outside the box. So, hey, we need double revenue, or we need to do this or do that. Like that's the type of critical thinking that I think I can add a lot of value to. And I can quickly ascertain whether I can help or not. So it really starts with a call. So you could reach out to me on any socials, book a call on the website. And then from there, we have this discovery call of what's going on, how can I help? A lot of times it's just maybe a 10-minute call. I offer some recommendations and then they're on their way. Sometimes, it looks like there's a deeper relationship potentially there. So we would start looking at some type of consulting arrangement where they either get access to me and my team. And we really try to go through and identify, 2 or 3 critical problems or goals that they have to be able to kind of solve. And then we help to kind of keep them accountable to be able to reach those. And that could be anything, hiring, firing, scaling an organization, raising money. Any of those critical problems that every business and every entrepreneur has, that's what we try to focus on, those 2 or 3 pieces. And that starts a relationship. I'm not a contract guy. If I don't add value, just don't use me anymore. Right. So you can kind of cancel anytime, but I just want to kind of build relationships. I'm intuitive by nature. So we usually start that way. Then throughout that journey, again, not all the time, but oftentimes, there usually is a relationship opportunity for me to become an investor or a partner in JV. And that's how, I've had a lot of fun, but that I don't want to kind of, forward step that. I like to be invited in that club. And only after you see, I'm adding value and my team's adding value to your overall business and process.
So when it comes to businesses being on fire, and I kind of laugh as I say that because I think most of them are always on fire.
Yeah.
And do they have to be of a certain size? Do you like them to have a certain dynamics or a certain complexity to the systems? Or is it merely, help, I have 3 months of this and I'm not, it's not going to last?
It's a fair question. So the deals we typically buy companies or invest in, we like to be probably at a minimum of 500,000 to $1 million in EBIT on a minimum. And then 10 million of EBIT on the higher side. That's kind of our sweet spot. But I say that with, a bit of cautionary piece, because I don't want that to, exclude somebody that thinks, oh, I've got this, but I'm just not there. Because maybe I can help you, maybe I can't, but it's worth a call. It's worth 5-10 minutes just having a conversation because, and I'm happy to do that for free. I want to be able to help. I think there was times when I was an entrepreneur, in the early days and even later in life, right? That you get beaten down. This is a lonely journey that we're on sometimes. And, to be able to just to kind of be a sounding board that's, non-emotionally invested, that's a lot of value. So maybe your business isn't there yet, but it will be in a year or two. Let's talk, let's have a conversation and go through. So I'd love to talk to anybody. Where we find us offering the most amount of value is in that threshold, because what happens is you've got these, single operator businesses and they've got a small team. They hit these mental roadblocks and like, hey, that's where I am. And they're comfortable, right? They're making like $1 million a year EBIT. Business is a good business if you own all of it or own, half of it. You're making good income and you're probably in the top 1% from an income perspective. And that's where they plateau, because they're like, oh, I got here, that sucked. And they could so easily go to 5 million or so easy to 7, but they're scared of like, well, fuck, what if I break it? Right. And I think it's like, dude, you're not going to break it. Like, you built a real business, but it's having someone else externally explain that to them and help. So that's where I've been able to offer the most value, because, and what I do isn't like, I'm not some like voodoo specialist. It's just simple business principles. Right. I mean, it's not, business is simple, right? We complicate it. Humans complicate it. So adding these processes and techniques that I've done over the last 20 years with, Inc. 500 companies, taking companies public, private, all those pieces. I mentioned industry agnostic because they work, because, people do business with people. That's it. And that's really what business is. So the more you can kind of simplify that, and that's what we try to do. So yeah, hope that answers your question.
Well, and I think too, that it's obviously it's your experience that helps them to trust that, that opinion. It's not just simply an outside sounding board that matters. It's being able to have somebody that you trust that is going to be able to build your business.
Yeah. And like, I mean, like my book that I kind of, I put out there, the first crack of it was all like business tips, advice, and things I did. And I threw it away because, it wasn't disingenuous. It was all factual and everything was accurate in the book, but it was only half the story because it was only the business side. So it was very hard. I don't recommend anyone doing this. It sucked, but I just brutally opened up and shared like a lot of personal stuff, because business is personal. And if you don't share that you're going through childhood, if you don't get through that stuff, it affects everything in your life, your marriages, your friendships, your partnerships, your business, everything. So I was just kind of open book. And that's where I get most of my positive feedback, is like, dude, that's, thank you for being so vulnerable. Cause I think if we could be more human and be more vulnerable with each other, the world would be a better place. So I put all that out there. And yeah, you hear the stories of all the big companies I built and so, but what you hear is me getting punched in the face several times and like going through, and hopefully, your audience and the people I work with don't have to go through all that I had to go through, but it teaches you, and hopefully by an example, like through resilience, as long as you keep moving forward, you've never really failed. There are lessons that you've learned, just don't make those same things twice. So that's it. I don't have this, hey, look at my illustrious career, because I've never had a failure. Dude, I've had tons of failures, but that's why we should talk, because maybe I can save you some steps that I just didn't see something coming. Right. And I think that's the piece, 20 something years of overnight success, 20 years in the making, right? We're not so smart because what I read in the book, it's what we've done and the experiences that we had. That's where the value kind of lies. I think that's an obligation for someone that's done it for a little bit to pass on to that next generation, because they're going to go through it regardless if you interact with them and interject or not.
Love it. Well, I've often said that the experience that we get, we can't just go from success to success to success. Otherwise we start to actually doubt that that there's something there and that it's worthwhile, entertainingly enough. And if we were a scientist and it worked, our hypothesis won every time, then we start to screw things up in order to prove that that is in fact the way it works. Because without having those boundaries or the gutters, in a bowling analogy, if you don't have your balls going in the gutter, you don't really know that you're on track or you're not. It's, yeah, it worked, but
yeah, but you don't learn anything, right? I mean, like I didn't learn clearly because I lost $2 million in 4 days. All my success was just blind halfway luck in a bull market, right? Yeah, I got lucky. I had a program, I had a system. I did some stuff right. It wasn't all just dumb luck. I just put it in a machine who in the lottery, but it was a lot of luck, right? With some with some strategy, but I didn't learn anything. And that was one of the biggest lessons looking back in life. Thank God I lost $2 million. That's how I look at it. Thank God when I was 19, almost when I was 20. Thank God, because that would suck a lot more if it happened now with, 2 kids and one on the way and a wife and responsibilities and employees. So you have to look at it from that lens that this happened to you. Okay. And then now you can kind of move on and learn from it. So it taught me a lot of humility. It taught me a lot of, maybe you're not the smartest guy in the room, because you never are. And in the moment that someone stops learning, I think you die, right? I mean, we always have something to learn. There's always a new trade, insight, perspective. There's always a new perspective to understand. I think the better you could be at reading people and perspective and understanding with empathy there, where they're sitting, it allows you to be a better negotiator, a better business partner, because you are now aligned with each other, as opposed to like, hey, this is only for me, and you're in these silos.
Absolutely. So when it comes to business and helping entrepreneurs, I know a lot of them are thinking, well, I just need more sales. If I just had more sales, it would solve all my problems. What do you have to say to those?
Well, I mean, I don't disagree to a degree, right? I mean, like, fucking, sales solves most problems, right? More money solves a lot of problems, at least gives you the resources to go and reallocate. So, it's not a bad place to start. And I think it's the right place to start, as opposed to like, hey, let's cut expenses, because then you're just kind of cutting your way to your own death. But I think it's where people look at sales. We so often look at, hey, I'm selling 100 widgets to 100 people. If I can only sell 10,000 widgets to 10,000 people, I would be this much better. And it could be true, right? But, the first place I start analyzing businesses is like, what is the product? And a lot of times it's, 1 or 2 different products. And, as opposed to going wider, which you should still do, oftentimes there's an opportunity to go deeper with your current customer base. So that could be a premium product, an add-on, something like that, that done for you service if you're in the service space. And you will have a population of your clients that you can go to readily and interact and sell to. Like that, especially in digital marketing, and a digital media company as well. Like, we all get so obsessed with, CAC, right? Customer acquisition costs, LTV, lifetime value, ROAS, return on ad spend. We get fucking, so like sports analysts with all these numbers and metrics that we look at. And so often we forget about the customers at the end. And then when we get them, we actually don't spend any time on those customers, right? Yeah, we'll put them in a nurture campaign and we'll do this and kind of touch them, but like, fucking talk to them, right? Talk to those guys like, hey, I'm thinking about coming up with this new product, and it's going to be premium. It's going to be these things, A, would you be interested in that? And then what else would you want to kind of see out of it? That's your focus group, man. They will come back to you with free information and telling you what they want to buy, package it up and sell it to them. It's not rocket science, right? Kind of going back into it, but we so often forget about those customers. The second group we forget about is people we lost, right? That were a customer and kind of, went away, or that we never got. I had a guy in the mortgage business that he had a triple month for 3 months in a row by just calling up and saying, hey, I won't give his name, but hey, it's Jeremy. Michelle, I'm Jeremy's mortgage. You put an application with us, come through, and we didn't do any business. I just want to reach out and see, like, how could we do better to help serve you next time? Picked up the phone, not a multi-split marketing campaign, split tested with 2 different landers and a text opt-in. No bullshit. Just call like, hey, it's Jeremy. And take some time, old school, but like, that's pattern interrupt, right? That's now like, oh, guy called me. Well, I just didn't get a call back, or I never saw the email, or actually I still need to do something. And just by doing that exercise, it does something different than your competitors. So yes, more sales, but it's not always, let's just spend more money on Facebook and Google. It could be easier than that, or in addition to that.
Love it. Well, and I've had clients that were afraid to do that. So we set up a automation system where they'd get a text. They'd send out 2 texts a week to their prospects and go, hey, if you get a chance, give me a call. On a text, they called back, and it forced them to have those conversations, which I thought was hilarious. So automation can work to make you more personable.
Absolutely. Absolutely.
Awesome. So
Yeah. That's a fair point. I mean, because I mentioned in the call, and some people would say, oh, well, I don't want to talk to people. And like, that's fine. Like, you're introverted. A lot of digital marketers, especially, are introverted, right? They don't talk. Like, I can write a great sales copy, but God forbid I have to talk to someone at a cocktail party. That's fine. But okay, there's people you can do that. There's appointment setters, there's appointment closers. There's things, there's a tool out there, and the tool could still be a human, but it just may not be you, right? I mean, you see all these guys that are, making, faceless YouTube influence. I mean, there's so much you can do. But just because you're scared of it doesn't mean you shouldn't do it. And really, it's something you don't like, it's probably something you should be doing, right? And that's a great place to kind of look into your business. So if there's something like, hey, I'm not doing it because I just don't want to do it, that could be probably one of your first kind of ahas. Like, all right, I don't want to do it. I'm not going to fucking do it, but let's get Sally to do it, or Michelle to do it with her service. And I think that's another
how do you get somebody to
Yeah.
do the thing? Awesome. So give us an example of a Cinderella story of one of your clients.
So, wow, there's a bunch. I mean, I think one I use all the time is it's learning how to pivot, right? And this guy was a phenomenal video guy. He's done this for 20 years, before weddings was a thing and being videography. And then he went into sports. He was actually the head media director for a big university here in town. And then went out and started just doing a lot of contract stuff, right? And now with stock video and video as a service, those margins, right, just like in everything else, have really started to constrict, and you can get that service done quite a bit. So he saw himself like, well, hey, I'm a little bit older. How do I go and differentiate myself? Because my retainer clients are, drawing up a little bit. So he'd always had this dream to go into digital ads in restaurants. So like, you've seen any like a Mexican restaurant, you see those TVs. So it's not a new idea, but a Mexican restaurant, you see a big TV with local businesses that are kind of going up there. So he's like, oh, that would always be my dream. It's passive income, and like, the margins are great, less hours, and that's kind of what I would like to do my next thing. So but he's had this vision for like years. I'm like, well, fuck, why haven't you just done it? And it's just that simple component of, well, how do I get my customers? I'm like, dude, you already have the customers, and you're losing them because they don't want to pay you this much money. What if you say, because you're doing the service, but now you're giving them like, what do they want to do? They're not giving you the video just to make videos of them to show it to their family. You're doing this video work for them to go and put out on, different, venues, whether it's their website, social post, whatever their ad vertical is, TV. You can now go to them and say, hey, listen, I know you're thinking about, cutting my $2,500 a month retainer. I've actually got this new business that includes video, because like his service, you have to have the video ads, and they already trust him. They know he does great content. So it includes one 60-second spot a month with free production, mind you, which is a massive value. And it's $500 a month, and you get into 25 of these locations, and here's the stores, and it's right in your community. They're like, wow. So he, in one hand, cut himself a little bit and took some $2,500 a month customers down to 500. Some kept them because the other stuff was working, but he won back a ton of the customers that had left him, right? And now he's got his dream and that passive piece. So it's just doing it sometimes and saying, hey, let's look at this other box, because you forget it. And he's, I mean, I think the other piece too was a little bit more mental for him. He's like, I'm not a sales guy. I'm like, yeah, that's fine. Don't be a sales guy, but you have to do this. He's like, nah, I can't. I just need to get a sales guy. I'm like, dude, no one is going to, and I tricked him. I'm like, okay, cool. I'm thinking about doing this video. And I was actually a customer. So I'm thinking about doing this. He's like, oh, dude, what we should do is, I mean, he just lit up like a Christmas tree and explained to it. I'm like, he's like, what are you talking about? I'm like, that's why you're doing this, because he doesn't, I was like, you're not selling like, here, put your pen to paper. It's because that enthusiasm, that passion, they're like, fuck, I want to work with that guy, as opposed to the 22-year-old kid. Like, hey, yeah, it's $495 a month. And I mean, like that, this doesn't work. They're not going to be able to sell the feeling and the emotion as well as they do. So it was a process with him, getting him, to overcome those internal, preconceived notions that he couldn't do something. I'm like, dude, you're already doing it. So yeah, that was a good one.
I love it. So some of the struggles that people might be having in their business that are listening right now, hiring is a huge one. Being able to retain staff, getting the right people doing the right jobs, getting them to do their own jobs, always fun. Obviously not making the sales or the revenue that somebody wants. Is there anything else that they are personally going through right now and going, oh my God, Jeremy, I need you so bad?
I think it's this level of feeling overwhelmed and, this uncertainty of what's kind of happening. And I think people think that that's going to go away, and it's bad to have that. It never goes away, right? I mean, I've had some success and I still have it, right? I still have like, oh fuck, whatever. Am I a dancing monkey? I've got to kind of go and figure this thing out. But that is kind of your job. Like it's stress and the thing. That's what you get paid to. You're an entrepreneur. You chose this, or it chose you, and embrace it. It's okay. It's okay to be stressed. It's okay to be overwhelmed. And I think just taking that deep breath of like, hey, I'll get through it. That's it. And I think that's really what I kind of go through. Everyone comes in there, they're in this huff, like, oh my God, the sky's falling. But we've all experienced that. We've all experienced this tragic boom, left hook, but we're pretty resilient as humans. So kind of getting through there. So that's the first piece. I mean, you have those experiences and you kind of feel it. Like, I just don't know what's going to happen. I don't know if it's going to work. The business is going to still be here. Should I sell it? What should I do? So any of that level of uncertainty, most of the time it's self-manufactured. So, that's when you should call. That's when you should reach out. Like, hey, this is what's going on, and talk to someone. And if it's just a sounding board and then nothing happens, well, at least you kind of got to vent in another perspective of it. There's no harm in that.
Love it. So I know our listeners are going to want more from you. Obviously, we'll have your links in the show notes. So peeps, you can scroll down, go to jeremydelk.com and book an appointment to meet with Jeremy, and, just pick his brain. It's a treasure trove of information there. And we're not done yet. So I get to ask you, at what point in life did you know that you were the special kind of crazy enough to think that you could become an entrepreneur?
Yeah. I mean, I think you would say, so I resigned from a high paying job at 21, living in New York City, got my dream. And, both my parents, my mom and my stepdad worked for the post office. So I was making like more than both of them combined. Just pulled myself back out of losing all that money, got the, world's my oyster. And then I just wasn't, I saw that I wasn't fulfilled, right? We weren't, other than making a lot of money, we weren't creating anything. And I had this inner creative component, and I just wanted to go and do something different, because I wanted to be in charge. I wanted to kind of actually see something create. And, I did it, right? And my parents thought I was crazy. I think everyone thought I was crazy. And I think I just did it. And what helped me do it was that $2 million loss. So I think that's it. And I had that event, which hopefully you don't have to go through to give you that push of the edge, but just having that comfort in yourself. Because what I told myself is, what's the worst that can happen? I mean, it can't be worse than that, right? And I could go get another job, or I can go and do it. So I guess that's the piece for me that I didn't realize it at the time, because I was just so young and dumb to go and do it. But it was that courage to take the leap. And I think that's where people struggle. I always ask this question, and it's rhetorical. Do you have kids, Michelle?
I do. One.
Okay.
30.
So when did you know you were ready to be a parent?
Maybe last week.
Yeah, exactly. Fucking never. Like no one never knows they're ready. So that's, you just do it, right? And I think that's the piece that you what is ready? What is it? I don't know that you ever can be. So just kind of making that step and feeling that confidence, like, okay, I don't know what I don't know, but like, I'm going to learn something. I'm going to do something. I'm going to give this a cost, because what do they say? The definition of hell is like when you die and you meet the person you could have been, right? I think if you can really think about that and let that resonate, like, don't, bet on yourself, man. Like you only get one go at this. So make it a good ride.
Love it. You've been absolutely awesome. Any last words for our peeps?
Yeah, I mean, embrace failure and just get started, right? I mean, I think that's the biggest piece. And you don't have to lose 2 million and go and, resign from a high paying job and start. You don't have to put it all on the table. That's kind of how I'm wired, but take a step, right? start the company, put a website up, ask the girl out, whatever it is that you're thinking about, just do it, right? And just take that one step, because that step will be monumental and will give you the courage to take the next one and the next one. But I think that's the biggest thing. That my biggest fear is that there's so many brilliant, life-changing, world-changing ideas out there. But sometimes they're in people that don't have the courage to actually go and take that step. So for yourself and for everyone, take a step.
Love it. Thank you so much for your time. I appreciate it. And I know how valuable it is.
Thank you.
Awesome. Peeps, this is Michelle Nedelec. Thank you for being here with us today. Be sure to subscribe to the show and share it with your friends. We love helping entrepreneurs grow.
Are you running a business over 7 figures but still struggling with technology headaches? Pay attention. You do not want to miss this offer. This podcast episode is brought to you by Awareness Strategies, who is offering a custom-built digital adoption roadmap for anyone running a business over 7 figures who's wanting to grow their business in the next 5 years. And it's not just a roadmap. They offer full implementation as well, if that scares the out of you. Check out awarenessstrategies.com/roadmap for more details today. The link's in the show's notes. Don't regret not doing this. Do it now. That's awarenessstrategies.com/roadmap.